The picture and tone right now in the U.S.-China trade war has not looked very encouraging all week, and you can see it reflected right now with stocks. Big losses. President Trump has doubled down on threats of new tariffs. Meanwhile, a new report finds that U.S. importers paid $6 billion in tariffs in June, and that is a 74% jump compared to a year ago. So the tariffs are hurting those U.S. businesses. Let's bring on Jess Smith, live from Washington with the latest. Jess, is there anything to be optimistic about here? What are people in D.C. saying?
You know, I think the only thing to be optimistic about at this point is that the White House is still planning on having talks with Chinese negotiators in September. We'll see if that happens, but the White House says they are at least planning on it at this point. The president did talk to reporters this morning and said that China is not the problem. He, again, started blasting the Fed, but he also went on to say that the market reaction to some of the China news is anticipated, and he actually thought it could have been much worse. He said, ultimately, it's going to go much higher than it ever would have gone because China was like an anchor. He went on to say that China was killing the U.S. with bad trade deals and someone had to take on China. But you mentioned that new data from the Treasury Department, and it shows that the Treasury brought in $6 billion in June from tariffs. That's up from about $5 billion in the 2 months prior. For the past 12 months, the number is more than $60 billion. And the Wall Street Journal points out that the Treasury is on pace to generate more than $72 billion from tariffs annually. And the Journal points out that if the president does go ahead with these tariffs on the additional $300 billion in Chinese imports, he could reach $100 billion, that number that he touts quite frequently. But as you mentioned, it is important to note that it's not China who is paying for the bulk of these tariffs, but it is U.S. businesses. Dan.
When President Trump announced an additional 10% tariffs on $300 billion in Chinese goods, that kind of took markets by surprise last week. So can we expect further retaliation from China aside from the currency manipulation we've seen so far?
We'll see. I think the ball is kind of in the U.S.'s court at this point to see if they do anything further, to see if, in light of the currency manipulation, the designation, now they feel like they can move forward with more tariffs or additional retaliation there. We'll be watching closely. We haven't heard anything about that yet, but that would be what we'd watch for next.
All right. Thanks, Jess. We'll be watching closely as well, and we'll see you on all the Yahoo Finance shows all day today.